Good evening. Here is Boris Sapochnikov, mortgage professional, and today we have very popular and hot topic: mortgages, mortgage rates, where they're going, fixed variable, and of course our main topic today is renewal and refinancing mortgages. I would like to start with disclaimer. All information is made available to you as self-help tool for your independent use and not intended to provide investment advice. I cannot and don't guarantee the applicability or accuracy regarding your individual circumstances. I encourage you to seek personalized advice. As in all my webinars, you will see real life examples and we will discuss different questions. You can use a YouTube chat, ask your questions. I will stop several times. I will check these questions. I will answer normal questions. And let's start. Okay. So let's start with mortgage renewals. So basic mortgage renewal facts. What is a mortgage renewal? So we have a mortgage with amortization for 20, 25, 30, 35 years. And of course, in Canada here, we are dividing this for smaller periods for 3, 5, 1, 2, 10, 7 years. And every time when this small period ends, it means the term of your mortgage is ended. It's the time to sign a new contract. The most easiest way to do is with your current lender. You just sign your contract and contract renewing with the new conditions, with new rate, and you continue to pay for the next period for 3, 5, 7, 10 years, whatever you choose. Now, what happened at the mortgage renewal time? And what is every lender actually praying will happen? Mortgage lender praying that they will send you a letter. You are busy. You don't have time to shop around. You don't have time to collect documents. You don't have time because of anything that related to anything. It doesn't matter why you're busy. And you will sign a paper, or in today's environment, they can even just give you a call and say, okay, we have a deal for you, this and this and this. Are you taking this deal right now? And usually people say, yeah, I'm fine. And basically lender not doing anything, just renewing information in the system, and it's going for another 3, 5, 7, 10 years. Why lenders pray for this so it will happen? Because it's cheap for them. They should do anything. They should know to go to shop for a new client. They shouldn't wait that new mortgage application will come. They're just renewing. So some lenders will even do discounts for clients, but in majority cases, lenders happy if you're busy, so you will just sign or more your resign your mortgage, and they basically want you that you will do this act. Okay, so people usually say me, okay, but if I want to renew, let's say with another lender, so this is a full mortgage application and you actually need to collect a lot of paper and do a lot of paperwork. And of course, everyone asking, is it worth it? Like, I will spend hours and maybe I will need to spend many hours to collect all new papers and reapply for mortgage and go through all this process, and what, to do it every 3, 5, 7, 10 years? Like, I'm busy, I don't want to do this. So let's look on the live example that I have here. And so it's actual numbers. It's not like from like good example from the book or good example from some website. It's actually live file example, the file that is going to close very soon for my clients. So what is the story? The balance on the mortgage with the clients $420,000. They got a call from the lender, and lender said that they can renew for 2.79% for 5 years fixed. It's not bad rate in today's market, and why not to take this rate? So, of course, what will happen at the end of the 5-year term? This will be a new balance, $335,716. Clients will pay interest $52,640, and that's it. So I got a call from the client, and client asked me if I can do anything better. So when you speak to your actual lender, you always should mention to lender that you may go and shopping around. So they mention this to the lender, and lender said, yeah, this is my best option. This is what I can do for you. So I was shopping around for the client. Of course, I was together with client go through the whole process, and we found another rate, 2.4. And client asked me a question: is it really worth to do all this paperwork, and I will spend like 10, maybe 15 hours to do this? So I said, okay, let's compare. And here I presented wrong method. Why I presented? Because majority of people believe, so if you have one interest rate and you have another interest rate, what you should do, and just you take your payments, take your new payments, find the difference, and multiply by 60. Why 60? Because we have 12 months per year. You multiply by 5, so you have 60 months. This is all term of this mortgage. So they multiplied, found that it's around 4,758. And in this case, clients, very busy people that have kids and working full times, have a very good salaries and have very good, and they said me, look, $4,758 is not really big money. One thing, we need to collect all papers. We will spend a lot of hours to doing this. Also, when you transfer mortgage to another lender, it may trigger appraisal. So somebody will come to home. It's not convenient to do estimate for the new price. Also, it may happen that you need to do some paperwork that required money. So it will be cost involved. So this 4,000 not very attractive. So when I spoke to the client, I said, okay, how did you get this number? And he explained me how he got this number. So I explained him it's actually wrong way to calculate and compare two mortgages. How actually we need to compare two mortgages? We need to find what will be a balance at the end of 5-year term with this new interest rate. We need to know how much interest we will pay. Why we not comparing payments? Because every time that we are doing payment, we pay the part of principal and we pay part of the interest. And new interest calculate based on the next and new principal. And interest rates, it's not like straightforward rates. It's not a simple interest rates. It's compounded rates in Canada. So if they fix it rate, they compound it twice. So it's like semi-yearly. So we have twice in the year when this rate compounded. Okay, in the middle of the year and the beginning of the year. So because of this, we need to take and compare balances at the end and also interest rates at the end. And when you compare balance at the end and interest at the end, and balance difference in balances is $2,737, and difference in interest is $7,496. So total savings actually more than $10,000. And not only this, when I spoke to this new lender who provided 2.4 interest rate, this lender was able to present this application without to trigger appraisal. So we saved money for appraisal. Also, when we did this transfer from one lender to another lender, we use a services that allowed not to pay a lot for lawyers. So basically, all was extremely cheap. All this transfer was very cheap for the client and cost just several hundreds dollars. So in total, client got in savings around $10,000 just by doing this switch. Of course, it took time. It took time to collect papers. It took time to sign papers. It took time to send these papers. But maybe clients spend, let's say, 20 hours. And now my question, is it worth it? 20 hours worth $10,000? It depends by client. If you make $1,000 an hour, probably it's not worth you. If you make $500 per hour, again, it's not worth it. But if your salary is relatively like normal, what I mean by normal, $50 per hour, $20 per hour. I don't know what is your salary. So what I'm speaking about, what do I mean by normal? I'm speaking about majority of Canadians or average Canadian. If you're average Canadian and not having extremely high salaries, this change in interest rate should be worse for you. So I believe I answered on this question, is it worth it? And now I want to go to the group chat and look. Okay, I see a hi from Itzik. Hi, Itzik. So I don't see any question at this moment in the group chat. So I maybe will write also hi. So by this, I'm just trying to encourage everyone to start to participate in this chat. Please leave your questions there. I hope everything will be extremely interesting today, and let's go forward. So, as I promised, we will speak about renewal and refinancing, and of course, we will speak about rates, because a lot of people say rates important for them and this is their priority. A lot of people say, no, rates is not the most important thing in mortgages. How mortgage is built is very important. I don't belong not to this first group and I don't find myself in the second group. I say everything that related to mortgages, it's important. And if I have a group of people or I have a client that speak to me about the rates, I want to educate this client what actually rates mean and how actually rates build and how I can get good or bad rates for this specific client. Okay? So let's start from what I wrote here is the factors that determine interest rate. So it's basically the factors that can help us to understand how rates is built. So first of all, first factor is time. Shop around early. What do I mean by this? If you're buying a home, if you're selling home and buying home, if you're renewing your mortgage, refinancing your mortgage, if you're doing anything related to mortgages, time is very important. Why? Because rates changing and you need to be on top of what is going on with the rates. When you in the renewal process, you already have a mortgage, you already have a house, you already have a physical address, so you can get a mortgage from another lender and you can fix a rate for 90 days, 60 days, 45 days, 120 days, depends what is the lender. And why it's important. When you have a physical address, you have a live deal, so you can actually fix rate the best in the market, and you can sleep soundly and wait for your renewal. More than this, when your lender will hear from you what rate you got from another lender, they may propose you even maybe better. So you have time, especially if you took normal 120 days period, you have time to play. You can time to play and put two lenders one in front of another and do competition. And through this competition, you actually will get a really best rate. So always work with your lender. Don't just say, oh, my broker will find me something better. No, you should make sure that your lender works hard and your broker works hard as well. Okay? And when they compete with each other, you actually will get the best rate. Credit score and credit history, it's so obvious. Like if your credit score and history is not the best in the world, like you have some problem with your history, you some problem with the credit score, you will not be able to get a good rate. It doesn't matter what happened. Okay, and it doesn't matter what circumstances your score went low or down, you will not be able to compete on rate. And in this scenario, I'm almost always say to the client, sorry, what is the promotion rate that you got through your lender, or what is the rate did you get from your lender? Is this one? Okay, I'm going to check, but because of history, it may be all these promotion rates on another rate from another lenders may be just not available for you at this moment. Sometimes what I am advising in these cases, again, it's not that you need to take this advice and now to use it, because a broker should look on your history, should look on your file. Sometimes I'm saying close just for a year or close just for 6 months. Let's repair your score and let's reapply after. And in a lot of scenarios, it's much better to apply for some temporary mortgage for 6 months, 1 year, 2 years, and after you apply to another one. And by this movement, we can save a lot of money on interest. Next, employment type and income. It's not always obvious, but it's actually a fact. Self-employed usually, unfortunately, cannot get the same rate as employed. And it's not fair. Honestly, it's not fair. A lot of realtors, a lot of mortgage brokers, they're self-employed, and unfortunately, we cannot get the same rate as somebody who employed and works at the same job 2, 3, 4, 5 years and maybe making even less. They not really care about actually income. What they care about stability. So even sometimes when I'm looking or shopping for mortgages, when I'm speaking to lenders, lenders even say this rates for self-employed and this rates for employed and this rates who employed and stable at least for 3, 4 years. It's actually the fact, and you cannot do too much about it. Loan size. It's one of the things that people not understand. Sometimes saying, why I have a mortgage $200,000 and my friend has a mortgage $400,000 and he got this rate and I got this rate. This is a loan size, because some mortgages built just for this loan size and some mortgages built just for totally different loan size. Some mortgages, like especially big mortgages, like over $1 million mortgages, it's totally different story, and rates for over the $1 million mortgages, they never same or comparable to the mortgages under the $1 million. And why? Because even if we are not using mortgage insurance, all mortgages under $1 million, they potentially insurable mortgages. And when people ask me, what is your predictions for 2022? We just started 2022, 2023. Do you have any predictions? I have feeling is what happened in the today's market today, mortgages probably will change. What I mean by changes, one of the changes that we can expect in today's market, that insurable loan size today is under the million. I believe it will increase. I don't know what it will be, 1.5 million, 2 million, 1,200,000, okay? But in what we see on the market, house prices of the houses changes, so insurable part will change. And as insurable part change, rates will change accordingly. Okay, so we'll see what happen. I don't know if it will happen this year or next year, but it eventually should happen. One of my predictions. Okay, I don't have crystal ball, but I honestly believe it may happen. Home value appraisal. It's very important that your appraisal will be very close to what actually you renewing or refinancing. So because if appraisal not match, you will not get rate. Okay, so home value also very important. Sometimes home interest rate will exactly depend by home value. If home value increased, so you maybe can get a better rate. And how it maybe, it's actually next one, loan to value. So when you have a mortgage part and your home part, so let's say this is your home, this is how much costs your home, and this part is your loan part, okay? So if we will divide this mortgage or loan part by total home value, if it's around 80%, you will get the worst rate possible. Unfortunately, the worst rate is around the mark 80%. If this difference around 5, 7, 10, 15, even 19%, and your mortgage was insured, so you're still under extremely low interest rates, because the best rates, it's insured rate by mortgage insurers, and they between, when LTV is like 99%, until like when you have loan to value from 99 to 80.5%, okay? But when you have 80%, unfortunately the rate is the worst rate. And it's go to 75. Some lenders put 75 as a change point, and you can get better rate when you have 75 loan to value. And it's go down to 65, and 65% rates can be sometimes the same as LTV when you have 90%. So lenders feel comfortable when you owing less compared to the price of your home, and when lender feel comfortable, he can give better rates. Okay, I want to pause for a second just to check a group chat. Maybe I have a questions here. Okay, so I saw a message. It all makes sense. Thank you. What about transferring collateral mortgages? Okay, so I would like to answer on this question. What about transferring collateral mortgages? Yes, you can transfer collateral mortgages. It's a little bit different from the standard mortgages. When you transfer collateral mortgages, you can get actually a good rate. I compared recently interest rate for collateral mortgages and interest rate for non-collateral mortgages. These collateral charges, sometimes we have much more paperwork, but what surprised me, some lenders today actually have a better rates for collateral charges. Yeah, like if you will ask me the same question about what about collateral mortgages, like about even half year ago, most lenders, what I looked, I saw that standard rate mortgages actually have a better rates. But in today's environment, because lender, when he has a collateral charge, he feel more comfortable, because when you have collateral charge, you cannot add anything on top. What do I mean by this? Uh, People who not familiar, who is right now watching this video, maybe not familiar that when you have collateral charge mortgages, it's almost impossible to put something on top, because bank already put collateral on 100% of your home. But when you have a regular mortgage, you sometimes can put on top of your first mortgage, second mortgage, and sometimes third mortgage. You can add private, you can add HELOC. So you can play a lot of things. You can have sometimes standard mortgage with one bank and HELOC from another bank. And sometimes even lenders giving option to have one mortgage from one lender and private mortgage or temporary mortgage from another lender. This can be done when you don't have collateral charge. But when you have collateral charge, it's like you kind of restricted. You have a lot of options under this collateral charge. It's very flexible options there. You can have HELOC from the same lender. You can sometimes have transfers between mortgage and HELOC with the same lender. So it's good to have collateral charge in some cases. Again, it's very individual, and you can actually get better rate with collateral charge. Another question: how do you calculate penalty if you're in the middle of the term with a fixed rate? Okay, thank you very much for this question, and I promise that I will return to this question. During this presentation, I have a part when I'm speaking about fixed and variable rates and about penalties, okay? So if I will not answer on this question during this part, Oleg, please remind me. Another question. Hi, I'm just wondering if you can elaborate a little bit on the condition of the breaking of the mortgage. I know some lender offer very low penalty for withdrawal, and some of them are very high. Andrei, thank you very much for your question. Yes. So again, about the penalties and how it works, I will speak in the future, like today. No, okay, during this presentation, I just don't want to finish the part about the rates. I will speak about a little bit more about renewal and refinancing, and when I will come to the part fixed and variable rates and penalties, I will speak more deeper about how it can be that with one lender one penalty and another lender another penalty, and how all this calculated. And okay, so we will speak about it as well. And the last question: how bank determines what's a home value? Oh, this actually about home's value, it's actually very easy process. First of all, you purchase your home. Okay, if you already purchase your home, so you already have some kind of value of this home. Now, banks has a computer systems, and a lot of different cities, different parts of Canada have different systems, computer system, whereas all purchase prices going in the system. So first thing what bank always doing, and actually also insurer what they are doing, they are trying to use these systems. Okay, it's not for public use, it's for mortgage brokers, it's for banks, it's for lenders. They're using these systems, and they're trying to get appraisal through the system. Okay, it's electronic appraisal automatic systems. And this system actually has comparable houses in the market that were sold, and they compare to your house because they know what is your house, they know how many rooms, they know all this data, or they got this data or through your mortgage broker, or you providing this data when you speak to the lender directly. Okay, so they compare this information and they can get a home value. If this home value is something that satisfied you, it may not cost you anything because it's done through the computer. It's not really, it's like kind of electronic appraisal system, and it's very cheap, and lender will maybe not even charge you for this. But again, you need to be satisfied with the value that this system done. Actually, this example that I provided just before about my client's case, client said me that they believe their house costs certain amount. So I said, clients, if you want to be approved for this amount, we will need probably appraiser, so person that will be sent through the bank that will actually will come and physically look on your home and decide is it correct or not. So client said, no, I want to skip this part. How can we do this? I said, very easy. Let's go down with what you actually want. You will still will get the best rate in the market for what your application has, and you will not need to pay actual appraisal. And it happens. So when I put lower amount, bank used electronic system, and they saw that my amount that I provided lower than actually what is system computer. It was amount approximately the similar what electronic system given, but client wanted more, but it was not given anything. If you're doing refinance and you need to pull out money, actually you don't have a choice, because when you want to pull out money, you actually need somebody that will come and do a physical appraisal. But when you just transferring, you're doing renewal, you move mortgage from one part to another part, sometimes on most scenarios I'm always trying to skip appraisal, and I'm doing this by lowering actual price of the home. When you sell home, you can sell for any price. Okay, so this is how system and how brokers determine what is the actual price. Okay, I believe I answered on all questions. I just skipped several questions related to the penalties and rates and how is all this about. I'm promising when we will come to fixed variable rates, I will return to these questions. Okay, so I spoke about LTV and debt ratios. So some of you may be familiar with debt ratios. It's GDS, TDS. Actually, what is it? Bank look what you own, like your mortgage, like you have mortgage, it's principal and interest. You pay for heating. If you have a condo, you pay condo fees. So they take 50% of your condo fees. And of course, municipal taxes. So bank calculate all this amount or per month or per year, it doesn't matter. And they look on your income. And they dividing your income but by all what I just said. And they getting a first number. This number says GDS. And if your number is 32%, you can get better rate than somebody who is number 39%. And of course, it can be any variation in between 32 and 39. I just recently saw promotion, one of the lenders was given promotion for 35. Why lender decided 35? Because he felt comfortable when its ratio will be 35. Okay? He doesn't feel comfortable if it will be 37 or 39. 32, of course, even better. But this specific lender had a promotion just to people who have 35 and lower. Okay? What is the next number? 40. It's all what I spoke about, but also they look on all your total debts. And again, if your all total debts close to 40% ratio, so again, how they got this number? They take principal, they have interest of your current mortgage, they're adding to this your taxes, like municipal taxes of your condo or home. If it's condo, they're adding condo fees, they're adding any loans, student loans, car loans. If you have line of credit, this is what very interesting fact. Sometimes people have line of credit and doesn't have anything on line of credit. Some lenders actually, they don't care. If you have line of credit and it's empty, they still look on this as a debt. Yeah, like I can give several examples of lenders. I just don't want to give these names right now because maybe you're currently working with this lender and you will feel bad that you will working with this lender. So if you will work with me and when we will look for the lender, I'm always trying to avoid this specific. Sometimes you don't have a choice, you have to work with him because this lender has some good promotion. But I'm always saying, client, this lender has very good promotions, that has very good rates, penalties good, everything good, but they look on your empty line of credit as something that you're owing, and you should remember this. They always will look on your 10 or 20, 30, 40, 50,000 line of credit that actually empty. You don't borrow anything, even dollar from there. They actually can look as you owing something. Okay, and this can have influence on your debt ratio. And you actually, instead to be on 40, you can be on 44. And if you will be on 44, you will get much worse rates than somebody who has a 40 debt ratio. And of course, sometimes we have worse scenarios when it's not 32, 39, it's like 50. Or instead of 40, 44, we have 55 or 60. In this scenario, of course, you will not be able to get promotion rates or good rates. In this scenario, you automatically fall on category higher interest rate. So the worse your debt ratio, like higher debt ratio, you will get much worse interest rates. Okay, length of term. If you take mortgage on term 1 year, 2 years, 3, 4, 5, 7, 10 years, all this have influence on interest rate. For example, 7 or 10 years mortgage, 10 years terms of mortgages always have higher interest rate. They also have a higher penalties. We will speak about penalties again later. Length of term for 1 year, 2 year usually have better rate than even 5 years. Sometimes 5 years term have better rate than 1 or 2 years. Again, it's depend by other circumstances. So length of the term is another parameter that have influence on interest rate. Amortization. You can take all your loan, like about the term, it's obvious, it's when you renew your mortgage. But amortization is your total period when all your mortgage run. And standard is 25 years. But some people take for 20 years, for 10 years, some people take for 30 years, for some people take for 35 years. Yes, I may be surprised some people, some listeners or who watch me on YouTube right now, that yes, actually some mortgages you can put on 35 years, and it's today in the market of Canada we can 35 years mortgages, and of course interest rate on 35 years mortgage will be higher than on 25 years mortgage. Okay, owner occupied, second home, rental. So if it's my own residence and I don't have any other homes, it's one type of interest rates. If I have my own home and I'm purchasing another home for my own purpose, I will never get the same rate as on my personal residence. It will be higher. Rental always will be higher because second homes and rentals on higher risk. But people who is purchasing rental properties, they don't care about the rates too much. And the reason why, because if you're buying rental as you usually buy it as a business, and this interest that you pay, you can sign down or sign out through the tax period. We are approaching tax period, so all people who had rental properties in 2021, with their accountant, they put up on paper, they calculate all interest that they pay through this period, 10, 15, 100,000, doesn't matter what they pay, and this as business expenses. Okay, so they actually can use it for tax purposes, and it helps. It's really actually helps with tax purposes. Home location. No, of course, province. Sometimes people are saying me, oh, I saw promotion, interest rate 0.9. Yes, 0.9 available. In today's market, you can get 0.9 for 5 years variable rate. You maybe even never saw this on promotional, on billboards, on anywhere on internet, but I can say you this rate already exists and exists more than in a month. You can get 0.9% variable interest rate. Can you get anywhere? No. Why? Because your home location is metro. So if you have a home located in BC, British Columbia, or you have a home located in Ontario, and the value of your mortgage is relatively high, you have a good chance, if all other parameters very good, you have a very good chance to get this promotion 0.9 variable rate mortgage for 5 years. Yeah, like even majority of banks don't have this promotion, but monoline lenders, they have these promotions at this point. Okay, so home location matter. And some lenders just don't work everywhere. Like I had a case in Manitoba. I'm actually, like, people who knows me, I live in Winnipeg, Manitoba. So of course I have clients not only from Ontario or BC. I'm working with all clients with all province or territories of Canada. So when sometimes I have a promotion, and I even sometimes saying to client, oh, I have a promotion, let's apply it. A client happy comes and we're starting to work, and and Manitoba is not on promotion. Why? I have no idea. Sometimes Saskatchewan not on promotion, sometimes Alberta not on promotion, sometimes even Ontario not on promotion, or Quebec. So some lenders, from some reasons, may decide this mortgage or with this rate, they're just not doing for this province allocation. And not just province allocation. If you in Winnipeg or you're in Brandon, it's both in Manitoba. So sometimes when you're in Brandon, you cannot just get rate the same as somebody in Winnipeg, because lender from his own decision just not allowing this rate for Brandon, or opposite. Sometimes in rural community we can get a better rate than in Winnipeg. Why? It's lender's decision. And so home location is also important. Loan type. Loan type. So when I'm speaking about loan type, we already spoke today about regular mortgages, standard mortgages. We spoke about collateral mortgages. Thank you for one of our visitors today's webinar asked me about collateral mortgages, so we speak about. And here I have an example of readvanceable mortgages. So what is a readvanceable mortgages? Is when you have standard mortgage and attached HELOC, and they're talking to each other. You can get this through several lenders in Canada. And what I mean by talking to each other, so when you put money for the mortgage and you pay down some principal, this principal automatically available through the HELOC, through the line of credit. Like if you usually have collateral charge mortgage, a standard, for example, you have $300,000 on regular mortgage and $100,000, for example, for HELOC. And as you pay down your mortgage, you still have HELOC $100,000 and you use just $100,000. It's more common case. In readvanceable mortgages, like if HELOC on top and your mortgage is down, as mortgage going down, your HELOC part is going bigger, so you can borrow more in HELOC. Until certain limit, all readvanceable mortgages, they have limit 65% for HELOC. 65% from the full or total price of the home. So loan type has influence on rates. You will never get any extremely low rates on this type of readvanceable mortgage. More than this, lender can put some limitations there. He can say, I'm not allowed variable mortgage. I'm allowed only fixed mortgage. Lender can say, because you take only fixed rate mortgage and because you take readvanceable mortgage, you get a higher rate, but because you take higher rate, your penalty will be lower. Okay, so I promise I will speak about penalties. So readvanceable mortgages usually have a history to be mortgages with low penalties. Again, it's not a law, it's not always like this, but in many cases it is. And the last line, I put it as the last one because all these parameters from the beginning, every client, every person has some kind of influence on this. Yeah, like you can make your credit score better, you can make more income and have GDS, TDS better. With the time that you pay down mortgage, you can do LTV that will be better. You improve your home, you build basement, you can make your home value better. Your loan size that you take depend by your down payment or how much you paid. So you basically have kind of control on all these parameters, and you can work with your mortgage broker on these parameters. But when we are speaking about availability to buy down the interest, it's a very interesting topic. So some mortgage brokers, they have this availability, but they're never using this. Some mortgage broker constantly using this. How I see myself about availability to buy down the interest, I'm positioning myself depends by client. If I can buy down, I'm buy down. So some of you maybe, what he is talking about? What is a buy down? Maybe some of my listeners or who is watching me right now on YouTube never heard about it. So I must speak about it, okay? So if you put on Google and start to say, right, buy down the interest rate, you probably will see majority United States websites because it comes to Canada from United States. In United States, actually customer, a client, can come to the lender, to the bank and say, what is your interest rate? Lender, let's say my interest rate is 3%, 5 years fixed for you. And client actually has a power to say, I want to buy lower rate. And lender may sell. So client puts some amount of money in front, and by this he is buying an interest rate going down. So yes, he put some money in front, client put some money in front, but he's getting better interest rate, and through these 5 years or 7 or 10, doesn't matter what is the term, he's actually winning on this, that he's paying less interest. This is what is going on there down south in United States. In Canada, we don't have this option. You as a client, you cannot come to the lender and say, oh, I want to buy instead of 3, I want to have 2.5. No, you don't have this option. Many lenders in Canada even not allowed to buy down the interest. So how you can get and know if there is option for buy down the interest rate? Your broker knows how to do this, okay? So mortgage brokers have access to lenders and has access what is called not advertised rates, okay? When we as a brokers go to the lender, we see actual rate and we see options how to buy down, okay? And how we buy down the interest rates from our salary. So this is, because of this is a difficult question. If you go to the broker and you say, can you please buy down for me this interest a little bit lower? Broker maybe doesn't have this option because his salary, what he will get, it depends by this. Okay, so when I am honestly and openly speaking about it, because I don't afraid to speak about it. Okay, and when client call me and say me, Boris, I got this rate, can you get better? I say, if I can, why not? Of course, I know that eventually my salary will be lower or my wages will be low. I will be earning much less, but I put my clients in. I know if I'm working with this client today, I hope to work with this client again and again. If I lock this client for 5 years or 3 years or 2 years, it doesn't matter what type of mortgage, for collateral, not collateral, readvance, or what type of mortgage, I'm really hope to get this client back. So I want to make sure that it will be happy. And if I need to sacrifice some of my salary, I'm always doing if I have this option. General questions that I will always ask. All lenders have these options? No. All lenders rates can be pushed down or buy down unlimited? No. Every lender has a limit how you can buy down rate. So they can say, okay, my today's rate is 3% and I am allowed to buy down until 2.8. And the same lender may allow to do it, and the same lender may allow to do it, for example, for self-employed people, and may decide not allow to do it for salaried people. So this is how all these parameters that I spoke about before can play around. So here are all the factors, and if you have any questions, please ask them before I go to my next part, and I'm going to check if any questions on the chat. Okay, can I just ask bank to lower or close my line of credit in order to get better ratio? Okay, when you have, oh, okay, I understand why you ask this question, because it's related to loan to value. Okay, so not all lines of credit, even if they're empty, they have influence on GDS or TDS. So you can always, of course, you can call your bank and say, oh, close my line of credit, and you maybe have a hope that you will get a better, of course, you automatically will get better ratio. Okay, your TDS will be better, and you maybe have hope that to get better rate. I say it may happen, but it may not. Why? Because as you saw before, I just showed a lot of factors here play around. So just changing your TDS, because line of credit has influence only on TDS, but just changing one parameter, you are not automatically getting better rate or getting better mortgage or getting something better. So this is why in this scenario it's so important to work with the broker, because when you come to the bank, they will ask you papers. They don't care about your papers too much. Believe me, they don't care, not like too much. They don't care at all in most cases. And why this happened? Because honestly, if you look on statistic of Canada, where's all mortgages? In banks. Why? Because historically people likes to go to banks. So if you look, where's all mortgages? In banks. Where's the rest of the mortgages? Some in credit unions. Again, people go to the credit union in person or calling them. Like in most cases, it's in person. Credit unions, 99.9999% they like in-person contacts. And they're all mortgages. Whereas all monolines or like private or other lenders, they have very, very small percentage in Canadian market. So basically, what I'm trying, when I'm answering this question, what I'm trying to say, just by closing your credit line, you're not solving a problem if you have a problem. You may improve something, of course you improve your TDS ratio, but and also, Andrei, thank you for your question. I can mention here, like for example, some banks and some lenders, they don't care. What do I mean they don't care? You have line of credit, let's say for $20,000, okay? And you hope by closing, but you don't have any money there, okay? It's empty, okay? You're closing this because you want to improve TDS, but some lenders, they don't care. They say, oh, you have line of credit? I don't care. It's empty right now. They even not entering this into the system. They don't put, so when brokers writing and speaking to these lenders, they put in notice, yes, client has $10,000 or $20,000 line of credit. So I'm, as a broker, put it on my notices, and I put no money at this moment. Lender double check, they pull in credit history, they look on your line of credit, it's really empty, nothing there. So they're happy, they know that it's nothing there. So actually with this lender doesn't care. Okay, so it's very, so again about your question. By closing, can you close? Yes. Can you close anytime? Yes. You will get better ratio with some lenders, yes. And it will improve your chances to get better rate with some lenders, yes. But with some lenders, they don't care. Okay? So work with broker and see what is the best scenario for you. Another question. Do I need to break my mortgage for buy down, or I will pay partial amount from penalty? Okay. Thank you very much for the question. Again about buy down. First of all, in United States of America, you have access to buy down. Okay. Again, here in Canada, so this presentation only for customers who live in Canada, doesn't matter what province, you don't have access to buy down interest rate. Okay. Again, I repeat this. Only mortgage brokers have access to buy down interest rates. So if you want to get better rate and you know or you heard that it's maybe option or possibility to buy down rate, you should work with the mortgage broker, and mortgage broker should agree to buy down rate for you because he buys this from his salary. No other options available. Okay, again, here in Canada, to buy down rate can only mortgage broker for his client from his salary. That's it. No other options. Do I need to break my mortgage to buy down? No, you don't need. So to buy down rates can be available to anybody who purchase, who refinance, who transfer, who is doing reverse mortgage or all-in-one mortgage. It doesn't matter. It exists for any type of mortgages in Canada. It exists, but a client doesn't have access to this option. Only a mortgage broker, and your mortgage broker should agree to do it for you. Okay? So it's no option that you can, oh, I will pay partial amount from penalty. No, you cannot, client cannot get access to buy down interest rate. Only mortgage broker. Okay? No, it's not, in Canada market, you cannot do this. Okay? I hope I forward. Yeah, I expected that it will be interesting topic about availability to buy down interest rate. Only broker can do it for you. And unfortunately, some brokers not doing it never. And I'm doing this frequently. Okay, so you come to the mortgage renewal, okay, not refinancing. We are still speaking about mortgage renewal. All mortgage renewal, you can start 120 days or 4 months in advance. So what is the smartest way to do mortgage renewal? And it's so simple. It's just two very simple steps. You know when your mortgage renewal, you can look on your mortgage contract or call your lender. You can look when is your mortgage renewal. When you come 4.5 months before, contact your current lender, or at least 120 days before, call your lender and say, hi, my mortgage will come on renewal on date this and this. What can you say? What is options available? And ask about 5 years, fix it. Ask about 3 years, fix it. Ask about 4 years, fix it. Ask about 4 years 3 years variable, 5 years variable. Ask as many questions as possible and write down all of them. And please let the person that you speak over the phone know that you're going to shop around. So you're not accepting their offer. You ask them even email or send you in the mail this promotion or what they said over the phone. If they refuse to do this, doesn't matter. You say them, I am going to shop around. Sometimes they can put you on pause and say, oh, wait, you're going to shop around? Wait. And they will go to the manager, doesn't matter where they go, and they can call you back even several days after, or they can, after you put on hold, give you another option. Doesn't matter what they give you, take it and write it down, but don't accept an offer. You say clearly on the phone, thank you for new rate or new promotion, thank you for this perfect discount. They can put pressure on you and say, if you're not taking this, like now, we will not give you this in a week. You can say them, okay, if you are putting on me pressure, it means that your race probably is not the best. So you pushing me to shop around, okay? Usually lenders, they know it's worse for them because it doesn't cost them anything just renew your mortgage. They will try their best to give you the most beautiful offer that they have. As soon as you get this offer, you're doing second step. You contact your mortgage broker and you say, hi, I got this and this rate. Now, I know some people trying to trick mortgage broker, okay? They are calling them and say, oh, okay, I call my lender and let's say today's rate around 2.9, 2.8, 2.7 for 5 years, something like this, doesn't matter. And they're calling broker and say, oh, I call my lender and lender said they will give me 2.2. Okay, it may happen. I'm not saying it may not happen, but it sounds not realistic. Okay, so your broker probably will ask you to provide a confirmed written letter with signed confirmation that you actually get in 2.2. Okay, but if you're honest and open with your broker and you're saying exactly what you got, your broker will do his maximum to get a better. And how he can do it? He just call to lender by lender or just look on through all promotions that are available and look for better options for you, for better rate. And it's not always just about rates. Sometimes it's better term, sometimes it's maybe better penalties, sometimes it's maybe switch from regular mortgage to advanced mortgage. You need to discuss all this with your broker, and this only 2 steps that you need. Okay, this is about mortgage steps for renewal and several tips. So please think about your financial goals, but think a little bit in the future. If you're going to do some changes with your mortgage in the next period, so you need to consider it. For example, if you are planning to sell your home, take this in consideration. If, of course, 120 days early, always ask for better mortgage rate, your lender and your broker, okay? And your broker, in most cases, 99%, I can say everyone who asked me about, like, not ask me in the last minute, okay? Not some kind of, I just got call, I remember it was during the summer, I got a call, oh, I got rate, and my closing in 2 weeks. Can you get a better? I said, sorry, Of course I can get a better, but not in 2 weeks. Why? Like sometimes I can get a better even in 5 days. But when somebody called me and asked me to do this in 2 weeks, I'm usually saying no. And the reason why I'm saying no, because person called me in last minute. And the reason why I'm saying no, even if I have sometimes resources to do it in just in 3-5 days, one of the reasons I've been saying no, because always when you don't have enough time, it's some chance that this transaction will not go smooth. Or lawyer will late, or lender will late, or another lender will late with accepting of this transfer. It will not be my fault. It will be lawyers or another bank fault, but I will feel bad if client will lose money because he wanted better rate and I got him better rate, but because we didn't have enough time, he lost money for transaction. So if you want to make sure that you want better rate, and you have to shop around early. Okay, 120 days ideal time. If you start even earlier, better. Okay, raw rate hold. How holding rates? It's very easy. When you get a promotion from your lender, it's automatically already in hold. You got promotion from your broker, it's automatically on hold. You have two rates on hold, you have two options on hold. You can compare with the terms and everything. Ask your broker to provide you written explanation why this one is better than another one, what's the difference in scenarios, what you will get, why this one is better than this one. And after you got all this, you should prepare your documents. If you can prepare documents upfront, it's ideal. Okay, what documents? Basic documents, the same documents that you use when you first applied for your mortgage. Yes, again, employment letter. Yes, again, your pay stubs. Yes, again, your ID, your check. All this confirmation of paying taxes. All this will be required by lenders, exactly like it was before. Okay, I'm going to check again if maybe another questions is here. Okay, yeah, I see some questions. Okay, yeah, I got answer yes, thanks. Yes, it's about the question about buy down. Yeah, so yeah, unfortunately, maybe sometimes I wish that we have some rules similar like in the States, but no, it's just for the brokers in Canada to buy down rates. And maybe it's better this way. Um, and we have less problems. We have our Canadian problems, not United States problems related to this. Okay. I don't see any new questions. We can go forward. Refinancing. Okay, I know that many of you here not about renewals. So we spoke about renewals, we spoke about interest rates, we spoke how one rate influences another. Let's speak about refinancing. Okay, so what is the difference? Why they sounds very similar, renewal and refinancing. Yeah, so but it's a huge difference. Okay, so as like when we have a renewal process, we are replacing one mortgage by another mortgage. The same happened here, but you can change everything through the refinancing. You can pull out more money. You can use this money for any purpose. Okay, it's very similar to renewal, same documents. Okay, it's again as applying for first mortgage, like when you apply for renewal or you apply for refinancing, the same documents. Okay, please don't think that renewal it's easier than refinancing, same documents. And please don't think the first time that you're applying for mortgage may be harder. No, when you apply first time for mortgage, you apply your 20th time on your mortgage, or you reapplying papers, it's always papers, and the better rate usually more papers, unfortunately. Why? Because lenders that giving better rate, they want to make sure that they will actually will get paid. Okay, they will actually get all the interest and they will actually make money. Please don't fall in traps. Some interest rate they called no frills rates. Maybe you heard about it. I forgot to mention when I spoke about the interest rates. No frills rates is very good, attractive rates, but they have very hard conditions. And sometimes you cannot do anything. Like even to break your mortgage, you can be in trouble to break it. You can be in not just a huge penalties, it can be another things attached that you cannot break. Okay, so when you see very attractive rate, ask this question: is it no frills rate? They should give you some kind of confirmation that it's normal rate, promotion rate, but it shouldn't have any association with no frills. No frills rate, it's the worst thing that person can get. It's good rate, but if you need to do some changes, it will be disaster, and usually extremely hard to do these changes, even with brokers. Okay, so let's go back to refinancing. So generally refinancing is a good option. What you need to do, you need to save money on refinancing. Okay, how you like sometimes you're not saving money because you're just doing this refinancing because you need to pay for your child high school or university, or sometimes you're doing refinancing because you have a problem with your roof. Okay, you need to replace your roof, you need money, you don't have money, you're doing refinancing just because you need to replace roof. Okay, and refinancing for replacing roof that costs maybe $7,000-10,000, sometimes it's better option than to take loan. I saw so many cases when people was doing, I will say, not very smart move. What they were doing, oh, they want to build or rebuild basement, they want to replace roof, they want to do some major changes in the home. What they are going to do, they're going to the bank or going to another lender and taking loan, okay, or taking something under the HELOC. It's not always the best option. How can you know this? Do math. You're not sure about the math? Hire a broker. What do I mean by hire a broker? You're not paying to the mortgage broker. Okay? You just call the broker and say, hi, I want to replace my roof. Perfect. Let's go through scenario. Yes, it's maybe not extremely convenient because to get loan from the bank, you call to the bank, you schedule appointment. Sometimes you can schedule appointment online. You have appointment, you go for the appointment, you spend maybe something in between 10 to 15 minutes, you sign papers, you got loan, done. Very easy. How much it will cost you? It's another story. Sometimes, on majority cases, what I saw, refinancing much more cheaper. You will not believe me, but I saw scenarios when buying a car through refinancing, it's actually cheaper. Yes, you don't believe, but it surprised me. People went to buy a car, found the perfect car they wanted, and they got financing. Payments were relatively small, so they didn't really care. They get a good salaries. They didn't even were looked on contract. They really love this perfect car, and they purchased this car and they used this car for many years. And when they looked back, when they worked with me and looked back on all this financing they did, they said, wow, why we ever did this? Because if they were doing refinancing, penalties of refinancing and taking money from the roof of the home and using this for purchasing car was in their scenario cheaper than take loan from this dealership. I was shocked and they were shocked, but it was already done. I was not able to help and do anything about it. Okay, so before you're doing any financial decision, if you already have a home, any major purchase, $10,000 is already major purchase. If you buy something or you're repairing your roof for 7,000, 6,000, maybe I'm speaking about very cheap prices, but maybe it's not very major repair, but it's very small repair. Any financial movement, if you have a home, sometimes you can get a second loan or you can get a second mortgage. You can get HELOC on top, or connect HELOC that was not connected before. Before you do any movement, check with mortgage broker what is the better option. And what people usually doing, they're running to the bank, and believe me, no bank, no credit union never will spend hours with you sitting and calculating if maybe refinancing or adding HELOC or adding second or third mortgage is better option for you. They will not spend time for this. You need professional who will sit and do this mess for you. Okay? Okay, so refinancing mainly is not about the rates. Rates also very important, but mainly it's about solution. What is the best financial solution? You need to look on all picture and see. Okay, I'm going to check a chat. Maybe some questions here. Okay, no questions at this moment. Please, again, don't hesitate. If something in your mind and you want to ask, ask. If it's something very personal, wait, call me after, contact me after, and I will be more than happy to look on your scenario and try to help you. Okay, so refinancing, it's usually about this financial solutions. Okay, I don't want to give you too many examples today. I will just show one small example. First one is very standard refinancing. So people value of home $500,000, the balance on the mortgage $370,000. They had rate 3.7. Don't ask me how and why they got this rate. This is what they were paying monthly, and cost of refinancing was around $7,000. A reason why it was $7,000, penalty include in this $7,000. So what they wanted just do street refinancing. They want to go away from 3.7 to get better rate. I was able to get 2.49 for them. Again, why it's 2.49 or not 2.7 or any other rate? Everybody has his own circumstances, and we already spoke about rates today, what can influence. So this is what I able to got. The new monthly payment, this was new monthly payment, and how I am checking, this is very important thing, how I know it was worth or not worth. So I know how much interest costs until the end of the term. It was around $26,000. Okay, I know what is the new interest cost with this mortgage involved until the end of the same term, not different term. It should be the same term. So if there are 2 years, 2 years in front, 2 years. It doesn't matter that mortgage is in for 5 years. I don't know how many years is left. So if it's 2 years, I need to compare 2 years in front of 2 years. If it's 2 years and 3 months, so compare 2 years and 3 months in front of 2 years, 3 months. I put new interest costs together with refinancing, and I'm making sure the difference is positive difference. So I will pay less interest, and if I am saving on interest, it makes sense to do this. If it doesn't make sense to do this, I'm not doing this. Okay, for this family, it was make sense, and saving is $4,000. Not only I saved for this family $1,000, several years, because this was just part of the term. They will continue to save on interest next years. And what even better happened to this family, if they wanted today to change and get this, they cannot. Because in today's market, we have January 2022, we don't have this. We don't have 2.49. I had 2.49 a week ago. Today, I don't have this. Fixed interest rate increase. So time matter, okay? One of the first things that influence interest rate is the time. If you have idea to change something, speak to your broker and see. And if you are not even doing any change at this moment, ask your broker follow up. How? to check if anything changes in the market, give you a call. Okay, changing the market, I have a better rate. Now it's worth to do change and do this change in time manner. Okay, so do it, the change when it's worth it. One more example. I love this example because this was family with good interest rate. Look, very small balance on the mortgage. They got very good promotion rate, 2.7. The payment was around $1,000 monthly, and interest of course until the end of the term around $25,000. But this family had around $40,000 on other loans. With this 19% interest rate, you probably know what I'm speaking about. Yes, it was a car loan. Yes, it was very good car, but dealer put 19% interest rate for 5 years, $800 in payments. 800. So family, okay, they have a mortgage, $200,000, very small mortgage. Usually only like in provinces like Manitoba, Saskatchewan, Alberta, we have this type of small mortgage. Sometimes Ontario and British Columbia, Quebec, they have also this small type of mortgage, especially if people pay these mortgages a long period of time. Yeah, so they even was not thinking that buying a car, they can refinance and buy a car. What they did instead, they just purchased a car, took whatever it was possible to take, and started to think after. When I calculated interest cost was almost the same as on mortgage. Unbelievable. Mortgage $200,000, interest cost around $20,000, and also on car $40,000. Car interest cost $20,000. Unbelievable. Okay, so how I was able to help? I checked was in cost of refinancing to break was not too high, just $4,000. Why it was not so expensive? Because a balance on mortgage was not very high. So we refinanced everything. So what I did, I added to the mortgage balance what they borrowed on the car, 40,000. Added to this another 4,000 for refinancing. So total a new refinancing mortgage that was included, everything in total was $244,000. Now, what I discovered, why they got 90% interest rate on car loan, they had a bad credit history. This is why when they got financing for the car, a good rate were not available for them. But they really wanted this car, so they took car with 19% interest. So only way it was go to the alternate lender. Look, people had perfect A lender. They were in the bank with a very good lender with 2.7% interest rate. What I am doing? Instead, I put them to the higher interest rate, 5%, with a B kind of private lender. Okay? Why? Because they're not qualified. Because of credit history, they're not qualified no longer. I'm pulling them out, and we are doing two things. We are working on credit score and credit history, improving them. I'm working with the people to help them to improve their history. And we are aggressively trying to pay. New payment for the loan with 5%, just $1,300. So before they paid $1,000 for the mortgage and $800 for the car, so $1,800, even more. It's almost $1,900 together. Okay, they paid almost $1,900 monthly for the car and mortgage. Now they will pay for the same things. They will pay just $1,300. So I saved them $600 monthly. Yes, interest rate much more higher, and it's almost private lender, but I saved $600 monthly. They will continue to pay this for 2 years, and I will switch them back to the 2.7 in the next 3 years. And I'm calculating all costs. I was not able to save too much on interest rates here, but family started to breathe. Instead to pay for car and home 1900, they started to pay just 1300. This family got $600 monthly to use for food, groceries, and other things. We're in the middle of inflation. Inflation rates crazy. People need extra money. So I was able to get this money for them. Yes, I was not able to save too much on interest because we were forced to get much more higher loan. But this was solution for this family. This is why I'm always saying, don't look on your neighbor. You have no idea what is their financials. Don't look on your friend. You don't know what is their financials. Look only on your financials and work with your confidentially work with your broker and find what is the best solution for you. Don't care what is the rate with your friend. Care what is works financially for your family. Okay? So okay. So before I am starting to speak about how to start refinancing your mortgage, I want to answer on the questions. What's the maximum percent of paid home worth banks can give at refinancing? Okay. Refinancing process is straightforward. Majority of the lenders agree to go up to 80%. What do I mean by 80%? Loan to value, 80%. For example, if your home cost on today's market $500,000, $500,000, 80% from $500,000 is $400,000. So this is a maximum that you can go when you borrowing money from the bank. And this 400 should include your mortgage and additional money that you want to borrow. And of course, you can include penalties there and everything you can include there. You can pay out whatever you need to pay out. Now, when you do refinancing and you maximize, it usually trigger appraisal. But cost of appraisal is not very expensive. It can be $300, $400. It may be more expensive, depends by area, depends by province, depends by regulations. Again, you should look on all picture. If it's worth it, if you save money, if you give your family live better, it doesn't matter that you will maybe pay higher interest because you maximize your loan. As I said, when you maximize and you go to LTV 80%, it's usually not good interest rate. 80% rate is the worst interest rate. But when you go to 80% loan to value, when you go to 80% loan to value, you can go to bigger amortization. You can go to 30 years amortization. So your payments, like your rate will be higher, but your payments will be low because your amortization is bigger. And in certain circumstances, if you really not satisfied even with this option and you need extra money, sometimes with 80 loan to value, you can go up to 35 years to go. Again, broker look on all picture, speak honestly with you and openly about all your circumstances and doing as much as him or she can do it for you. Okay, I hope I answered all these questions and I want to go back. So how to start refinancing your mortgage? You have set a clear financial goal. What do I mean by goal? You should know why you need this money. And it should be not like, oh, I'm refinancing because I just want better rate. It's also a goal, but speak to your broker what else around, what is going on about your family. Sometimes it's bad circumstances and you have struggled with a job. Speak honestly with your broker because if you struggle temporary with a job, sometimes broker can help. If it's struggle consistent with a job, sometimes brokers need to look for alternative solutions. Some lenders that maybe, like if you're looking for a job and you believe in 6 months you will go back on track, so maybe you can put yourself on 6 months some period to breathe a little bit, maybe even not to pay full mortgage, pay maybe just interest on your mortgage. It's also this type of mortgages, interest only mortgages available. Give your family some time, you get a job, you everything, and go back on track. Okay, you need to be clear and honest about your goal, and you need to build strategy when you're doing refinancing. So as I said, refinancing, it's not about rates. If renewal, I honestly believe renewal is for small solution, for small problems, and it's usually about to get better rate and have good plan for near future. Refinancing, it's not just rates and plans and goals, it's about to solve a problem. Now, always clarify with your current lender what he can do for you. You should clarify outstanding mortgage balance, mortgage payment and frequency, your interest rate. You need to know your current term, when it started. You need to know your general amortization period. And of course, you need to know prepayment penalty. So all of this information you can get easily to get. If you have lender with online lending option, a lot of lenders have like clients portal. You can clarify if your lender have clients portal, and you can get all this information through the clients portal. About the penalties, they usually not publish this, so you should actually or send them email or give them a call and say, please calculate prepayment penalty for today, and immediately start to work with the lender and broker. Why immediately? Penalties that you will get over the phone, it's relevant to this period. So anything will happen during the next week, 2, 3, will be connected to this penalty. I saw not very, like I will say, I saw difficult situation when penalty was excellent or relatively good or relatively small. What I mean by penalty is always, if it's excellent, it's a small penalty. I saw very small penalty, and clients had time, like we busy, we have time for other things to do, and clients was kind of thinking maybe it was not on his priority. Okay, your priority, it was not on the family priority. Okay, and they waited, and I calculated everything based on what I had on paper, on penalty what was provided by lender. But when we actually started transaction months after, penalty increased dramatically. Why? Because penalty is calculated complicated. If it's fixed mortgages, it's very, like I'm not saying it's very complicated calculation, but it's relatively not easy and not straightforward calculation. Why? Because like I can put formula here and explain how to use this formula, and a lot of, like, even if it's hard for you, I can explain again and again, and finally we will be able to use. We can even build Excel calculator for calculating penalties, and some websites already have option to calculate penalty. But problem with the penalty, that penalty depends by many factors, and one of them, what was a rate that lender give you at the day when you sign your mortgage. Like for example, your rate was 3%, but lender write always, any lender. It doesn't matter that it was not promotion. Every rate that you get in Canada, it was promotion. Okay, so it was discount there. Like you go for shopping for clothes, you see 20% discount, 10% discount, 30% discount. It's not really discounted. Okay, This is actually what they're actually selling. It's just kind of sales option, the same with the banks and with any lender in Canada, okay? And not only in Canada, okay? So what they say, anything that wrote in your contract, you don't see a word promotion, okay? But it's actually promotion. Any rate that you get in Canada, and even if it's very high rate, it's promotion. Okay, you got 5% rate, it's promotion. You get 10% rate with a private lender, it's promotion. So they put any rate that's on contract, it's automatically promotion. And real rate that they put in the book, it's always higher. And when they calculate penalty, they compare the rate that you got, okay, promotion, kind of promotion, but it's not really promotion, to the rate that in the book. And they want to get covered and penalty for that what they lost. Okay, it's not fair, and we are calling this non-fair penalties. And majority of lenders have non-fair penalties. People usually say to me, "Oh, but before I'm even calling to lender, I want just estimate. Estimate, it's easy. It's extremely easy. If you want just estimate your penalty, take 4%. What do I mean by 4%? If you loan $100,000, 4% from $100,000, $4,000. This is estimated penalty. People say, oh, it's too much. This is a standard or relatively standard for majority of lenders in Canada. Okay, some people say, no, Boris, it's too low, you should put 4.5, 5%, and it's no formula existed, you should go with rate differential and calculate appropriately. I say, you can go with rate differential and calculate appropriately 20 times, but you will never know a true, because you will never know what is actually in the book of this lender. Can you get this information? Of course. You're allowed to get this information, especially when you sign contract with your lender. You can ask, okay, I got 2.7, thank you very much. What is my, I understand that my promotion rate, and what is the actual rate? Because your broker maybe even pushes a rate this for you. So you even don't know what is actually promotion. So maybe you have a rate, okay, and promotion rate was even higher, and real rate was even more higher. So you will need to cover now all these differences, and you will never be able with any formula in the world to calculate this. Okay, so do this very easy. So if you borrowed $500,000, so it's 4,000 times 5, 20,000. Okay, this is your, you can say, oh, 20,000, a lot of money. Yes, and this is why fixed rate, this kind of attractive rate, this is the most advertised rate in Canada. They selling security, nothing they're not selling security, they're selling penalties. What any lender in Canada who's selling fixed rate, he is hopefully praying that this will be breaked and you will pay penalty. This is when they're making more money. This is exactly a time when they're doing money. Okay, so they're not making money when they're signing contract. No, they're not making a lot of money when you pay interest rates. Yes, you pay a lot of money for your interest when you're borrowing money, but actually when they're making really a lot of money, when you're renewing and you don't care, you just get a letter, oh, this letter for renewal, I'm signing contract. So you're basically giving the lender to renew and do with you whatever they want, or not do whatever they want, what you agreed. Okay, you was not shopping around, you didn't have a time, you didn't save money, and also, yeah. So when I'm speaking about fixed rate, it's always penalty around, and only one source information is correct. It's not your mortgage broker. It's not friend. it's not the best calculator in the world. It's only your lender, your current lender knows your actual penalty. And you will be shocked if you will, just as an exercise, will be shocked. You can go on the lender's website and calculate your penalty and give a call, and it will be some difference. Why? Because just them know what actually discount they put under your penalty. And you will be shocked to check in a month or two and call them again. You will be shocked and see what's the difference between penalties. And sometimes when you pay more, your mortgage penalties going down, and sometimes when you pay more your mortgage, penalties can go up. Why? Because in the market at this period was some kind of change in the rates, so they will try to recover this change by using your money, by asking you to pay more penalty. And sometimes people say, no, it should be a formula, it should be a law. Yes, and it's exactly written in their books, but in all these interest differential rate penalties, they connected to the actual rate written in the actual books under your name, and only you can know what is the actual numbers. And they calculate. They're not bringing numbers. They're not doing some illegal things. They're doing actually legal things. It's under your contract, but unfortunately, only when you break your mortgage, you know actually what you actually signed. And so the first step, easy. Have a goal, clarify everything with your lender, include penalty, and the last step, you return to mortgage professional and do math, and you know what to do next. I want to look maybe another question here. Do you think that paying penalty in the middle of the term is worse in order to have lower rate for the next 5 years, considering that rates will do up a few times this and the next year? Brilliant question. It may be yes. It may be worse. How can I know? I don't know. How you can know? You don't know. But you can give a call to your bank, ask about penalty, get all information that I just mentioned. You can call me. Yes, we maybe spend some time sitting together and discussing this, but we need time to do this. Okay, you will maybe spend maximum like 40 minutes, maybe hour with me. You will provide me all these numbers. I will look on your financial situation, and I will look what is the rates today that I can get fitted for you on your personal financial situation. I will calculate and I will give this information to you, and I will show you, is it worth or not worth. I will show you, it will not be my kind of feeling, oh, I feel it may be good. No, it will be actually math, and I will email you this actual math, and you will see these numbers that actually for today, and you will decide to do or not to do. Okay, I hope I answered this question. So you just guessing will never help. You need to know what is your rate now, what is your rates that you're eligible. Rates going up, yes, rates going up. What is going on right now on the market? Variable rates low, they continue to be low, they're not changed. Fixed rate change. Okay, yesterday I had a long night, like really long night. I started on Manitoba time like around 7 p.m. and I worked almost until 3 a.m. writing emails, messaging my clients, interest rate going up. If you need to close something, let's close. If I was able to close, if I have actual deal and I was able to close, I closed. But if it's not possible, not possible. Like if client doesn't have an actual address and cannot close a deal, not purchase right now, or not sure what he wants to do, she wants to do, what can I can help. So I was spending time actually informing everyone that rates going up, rates going up, rates going up. Okay, so the fixed rate already went up, and I don't know for how long. I don't know if they will go down at some point. Okay, but variable rate at this point still low, and on January 26th, so it's actually next week, we will know if it will Bank of Canada will make decision, and we'll speak about it in just a minute. Let's go forward. And the topic that I believe majority of you waited, fixed versus variable. Okay, I will try to go fast. I know, thank you very much. You're already with me almost 2 hours. I believe everybody tired, but you have this recorded, so you will be able to go back, go forward, watch it several times. So I will try to do it fast. Okay, so fixed versus variable. First of all, every person before he is choosing fixed or variable should decide, what about my risk tolerance? And I put here in the words, sometimes the best choice is the one that allows you to sleep soundly at night. If you will worry about the rates at the night and thinking what in January 26 happened, what will happen in March, what happened in June, or they posted something like this. If you kind of personality that you know that you will worry and all family will be worried about the rate, take fixed, forget about variable. Okay? Can I help with these worries? Yes. How I'm usually as a broker helping when my client works with me and we at the point to decide fixed versus variable, and clients knows what he wants, I go with the client. Okay? But if clients wants me to build scenario, I'm not going to show it how I'm doing this. I'm usually building on Excel file scenario. What is happening with fixed, what happened with variable, how much interest paid here, how much interest paid there. If variable will go up, these steps, this is what you will pay, so I'm actually doing math and showing client what he or she must do if they choose to pick variable. If you ever hear from your broker or anyone in the bank with mortgage specialist, I don't know who, saying, what do you worry? Take variable and switch to fixed whenever you will decide. The worst, I call this not worst, I call this nightmare scenario. If person who picked variable in the middle of the term, and doesn't matter 3 years term or 5 years term, will switch to fixed, it's exactly like what happened in the financial market. It's like, okay, I am buying stocks, and when market is going down, I'm in a panic and I'm selling stocks, so he's losing money. It's exactly what happened with the person who is jump from variable to fixed. Never, if you already decided variable, never jump from variable to fixed in the middle of the term. Why? Because you will lose. You will lose, and you will lose a lot of money. If you are planning or thinking to switch from variable to fixed in the middle of the term, take fixed from the beginning. Okay? So, if you take variable, you with variable until the end of the term. If you took 3 years, you on variable 3 years. If you 5 years, you on variable 5 years. Let's speak about penalties. As I said, penalties on variable very low. Okay, I take $100,000. I already showed this is an example, $4,000 approximate penalty on fixed. On variable, it will be around $500. Why? Because how calculated variable penalty is just interest. Okay, interest for 3 months. It's always, doesn't matter where you take variable, with the biggest bank or with the smallest bank, it's always just interest for 3 months. Do you want to know approximately your penalty on variable? Easy. You take your mortgage amount, let's say your mortgage $100,000, you multiply by your current variable rate, in this example is 2%, you divide this by 4, it's this approximately your penalty. You see difference? $500 compared to $4,000? This is the difference between breaking variable and breaking fixed. If you think that you need to do some changes in your mortgage in the future, maybe refinancing, or maybe going to different lender, or maybe selling your house, take variable because penalty will be lower. And it doesn't matter that variable go up, because with all this interest that will, even variable will go up, even 8, whatever Bank of Scotia said, it will go up 8 times 0.25. So 8 times by 0.25 is 2%. Even if variable rate go up to 2%, and you know that you're going to break mortgage, you must take variable. Why? Because you save on penalty. Okay, so if you think you have a chance that you break, take this. People ask what usually happens with Canadians in average. So most of Canadians break their mortgages early, never waiting until the end of the term. So take this in consideration. So your goals and plans matter. What is today's spread between fixed and variable? Today's spread is 1.5%. In some lenders 1.25, 1% spread. It's a huge spread. So you have time to recover. So if spread at least 0.75%, people or most of brokers usually suggest to take variable compared to fixed. And market, you need to look on what is going on market. But if you don't understand what is going on market, even don't look on this. Okay, why you need to look on the market? People who understand, they know that fixed rate depends what is going in the bonds. So if it's bonds go up, fixed rate go up. If bonds go down, fixed rate goes up. And variable depends Bank of Canada and general economic growth. If economics growing up, variable going up. If economics has a problem, like virus, people losing jobs, it's usually variable going down. And yeah, if you have a questions, ask these questions. But again, when you compare fixed versus variable, this is 1, 2, 3, 4, 5. This is 5 rules that you should check yourself. I'm going to check if any questions here. Variable rate will go up as well due to increased prime. Yes, you're right. Variable rate go up due to increased prime. But again, I can build on Excel very detailed simulation according to your personal circumstances, and I can calculate personally for you, is it better go with variable or go for fixed, even if prime increase, and we can look on different scenario, and you can, based on your tolerance to worry, you can check what is better for you. What is the current interest rates, fixed and variables? What is the numbers? What is the range or best you can offer now? Okay. I just mentioned the range between fixed and variable rates around 1.5%, but it depends by lender, it depends by personal circumstances. People ask me, what is the best rate? No, it's very funny question. The best rate today is 0.9 variable, but is it applicable to you? I don't know. Okay, so is it applicable 1.2 for you? I don't know. Is it 1.5 applicable for you, variable rate? I don't know. So I need to know what is, yet I need to know your application. I need to look on your file, and if 0.9 will work for you, I will give you 0.9. But if it's just one, if it's 1.2, so I believe you understand. So if you ask me what is the best variable rate today is in the market, 0.9. This is the best variable rate in today's market. If you ask me what is the best fixed rate in today's the market, unfortunately, after the increase that happened just recently, I don't have exact picture. I checked several lenders, and it's right now it's changing. So if yesterday I was able to give exact numbers, today I don't, because all lenders now started to rise. So even if I say this, I will not be able to get it for you, because tomorrow it may change, but I can say approximately. So fixed rate for 5 years mortgage today starting at 2.5 and ending by 3. So can you get 2.5? I don't know. Can you get 3? I don't know. So I need to know what exactly your personal circumstances, and it's somewhere in between. Please don't use my words as like that you can go forward with these rates and shop around, because as I said, rates change at the last night, and maybe some promotions already run out, and maybe some lenders will do opposite. They maybe will wait until the rates will go up, and in 2 days they will wait and will put their rates a little bit lower to actually pull out back clients to them, and instead of 2.5 we will see back 2.4, 2.3, 2.2. 3 days ago I was able to see even 2.1, but now I don't see this. Okay, so again, best rate on today's market for 5 years variable 0.9. The best rate on fixed rate 5 years on the today's market, what I thought was 2.5, but it may change tomorrow. And I don't see any other questions at this moment, and I want to go on mistakes. So let's go quickly around the mistakes, please. This is a most frequent mistake that people doing. People not considering refinancing renewal at all. They believe signing papers is most easiest way and this saves them money. It's not true. Your current lender will never save your money. Okay, when you switch lender, this is way to save money. Always look on your future plans. If you plan to sell your home, it's totally different than you're not planning to sell your home. Constantly check your credit history score. You can subscribe and get your credit history and score for free today. Only when you consider, as I said, only your existing lender, you lose money. Because this is how lenders make money. When you stick with, lenders make money by this, that you stick with the current lender. If you're not shopping around, you lose money. If you look only on interest rate, you lose money. If you choose wrong term or amortization, you can lose money. Taking out other loans, you constantly lose money, because if you have option to refinance and cover a loan instead to take loan from another lender, you lose money. If you frequently changing your job, you may not be available to apply for mortgage, so you must stick with your current lender, and your current lender can do whatever he wants with you because you switch job and you cannot go anywhere. If you wait until the last minute, until the end of your term, you definitely will lose money. Make good tradition to check your mortgage at least once a year. Pick a broker and be annoying, okay? Call your broker and say, check my mortgage, and do this every year at least. I know people that doing this every half year. Okay, let's say they took mortgage in January, so they check mortgage in January and June. June. Okay, some brokers doing this as a routine. I'm doing this usually yearly, sometimes semi-annual, depends by client circumstances, and this service not cost you any money. And people not negotiating fees. Okay, when you're switching mortgages, when you're refinancing, it's fees. You need to have power to negotiate your fees, and I already provided examples how to negotiate. What more? Renewal and refinancing process, they can reimburse you sometimes on legal fees, discharge fees, appraisal fees, tax and insurance fees. Like if you remember at the beginning of this presentation, I showed as I was able to save client appraisal fees, I was able to save client legal fees. So cost of renewal for client was just several $100 instead of several $1,000. And we at the end, okay, if you have any questions, I will wait another minute. If anybody still have power to ask any question, we had 2 hours presentation today. I'm really happy that everybody who was able to make it until the end. It was surprisingly a lot of questions. I'm happy that you. So how to reach me is very easy. You probably reach me through purchasing free tickets through Eventbrite. So you can find me through the Eventbrite. If you found me through the Facebook, so you can easily to reach me through the Facebook, direct message through the Facebook, or direct message to my Facebook page or group. You can subscribe on YouTube channel. Welcome to subscribe to YouTube channel. Welcome to subscribe to my Twitter account or my Instagram account. Okay. Yeah, thank you very much for participating, and thank you, Oleg, and thank you, Sergey. Yeah, I hope this information will help. Please don't hesitate to share this information with anyone. Yeah, Sergey and Elena, thank you very much. And again, if you want, you have this link. You can share this link to this video to anyone of your friends. I hope this information will help them. And yeah, thank you, Andrei. And yeah, so I don't see any questions at this moment. Everybody tired. Have a good rest of the night for you. I don't know in what province you're right now. Here in Manitoba, we already have 9 p.m. I am releasing you back to your families and doing your stuff. Thank you very much again, everybody. And I am going to close this presentation.